Hello, everyone. Thank you for joining us today. I'm Sarah Campbell. I'm USDA's Beginning Farmer and Rancher Coordinator. So I do all things beginning farmers at USDA, and we're very excited about the webinar that we have today. We have JC Hobbs, an Associate Extension Specialist with Oklahoma State University, and he's going to be presenting to everyone on hobby loss rules. And just a couple of housekeeping notes before we get going. This webinar is recorded. All of the materials are online. If you go to farmers.gov/taxes, you can see previous webinars and a whole bunch of resources and links to websites like ruraltax.org and agftap.org. So this webinar is brought to you as part of a larger effort by USDA to help farmers navigate the tax liability and of their USDA program payments, particularly in the wake of all of the disaster payments and pandemic relief, but also to make sure that beginning farmers get set off on the right foot, since we know it can be very confusing and overwhelming and folks have a lot of tax questions. So we've partnered with tax experts like JC to walk you through the sort of common stumbling blocks and best practices and all that fun tax stuff. So during the webinar, if you've got questions, drop them in the Q&A. I'll read them out to JC as we get to the end of the webinar, and we'll answer those. And thank you everyone for joining. And without further ado, I'm going to turn it over to JC.
Thank you very much, Sarah. I like your comment, fun tax stuff. Isn't that kind of an oxymoron? Without any further ado, like she said, let's jump into this presentation. We're going to be talking about looking at hobbies versus a trade or business, why you don't want to have your business classified as a hobby, and what you have to do to make sure you avoid the hobby issues when that trigger IRS questioning of your true business operations. Second slide here kind of talks a little bit about our group. It's Rural Tax Education is our goal. I'm part of the National Farm Income Tax Committee, and we put together a lot of this information on various tax items. We've got materials on agriculture, timber, rural tax type topics, and you can see the list there starts disaster and weather losses, government payments, self-employment taxes, like-kind exchanges, some estate and gift taxes, etc. So there's a lot of good information. And the website for that is ruraltax.org, and we will point that out again. But you'll see there's the website on the left-hand side of your screen. Here's a disclaimer about what our material is and who's supporting us. We have a cooperative agreement, the number there. What we are doing, again, is education purposes, explaining the rules, explaining the law, providing educational information and material. So our goal is, again, not to make you tax experts, but to help you understand the rules, regulations, and what it is you need to know to be able to talk to your tax professional and work through various problems that do arise. So jumping into the presentation itself, hobbies, a business or not? This is a question that, and it actually came up in an audit many, many years ago. We had a 15-acre cattle ranching activity. IRS brought it to question. What I want you to think about during this presentation, is this going to be a hobby, or would you call it a bona fide business venture? So what we'll be looking at is how to make sure that any venture is looked upon as a business and not a hobby, and why it's important to be treated as a business. So if it looks like a business, sounds like a business, and acts like one, then it must be a business. Making sure that we do everything correctly. Good records is the first and greatest step to looking like a business. And IRS does not require that your business records, informational records, be kept in a specific manner. All they want to know is they are accurate and relevant. So it can be as simple as just a hand ledger, or as complex as a computerized system. Again, IRS does not specify how you do it. They just want to make sure that you have that information available. Also, make sure there's an indication of a profit motive or business growth. So you're wanting to make sure that your business is trying to make a profit, or the business is going to be growing, improving, becoming more efficient, etc. So generally, we look at an activity carried on for livelihood or in good faith to make a profit is a business. Facts and circumstances is what is used, and that's what IRS is looking for, to determine whether the activity is truly a trade or business. They're wanting to know about the regularity of the activities that's being done for the business and the regularity of transactions. How often do you buy feed? How often do you buy seed? Fertility, these types of things. How often do you have income rolling in? Also, like I said, the production of income and ongoing efforts to further the interest of your business. In other words, what are you doing to make sure that the business is going to continue into the future? Here's a court case that came up in the, I believe it was in the 70s, 60s or 70s. And this is what the IRS now hangs their hat on in terms of what they're looking for in an audit. This gentleman was a professional gambler. And what they were trying to question was his gambling activities a trade or business? So was he in the business of gambling, or was it just a hobby? What they asked for and what they looked at was the continuity of his business activities, his gambling activities, and regularity of those. And was there a profit motive? Was he trying to do things that increased his potential of winning? Books, studying, etc. It was actually found in that case that there was continuity, was regularity, and he did have a profit motive. So that is really what the IRS is looking for when they begin to question whether a business activity is truly a business activity or whether it should be classified as a hobby. So hobby farming, and I've put the code section here, 183. So if you need to take this information to your accountant, you can, and he'll have the information of where to go to find it. But a hobby farming, what we're looking at is several years of losses on a tax return, and that will allow the IRS to question whether or not your business is truly a business or are we just a hobby. So what you're looking for is a presumption of a profit motive. That's what they want to do first. And in this way of evaluating whether or not a business is a hobby or a true bona fide business, is they have some profit scenarios that they want to look at. They want profit to be in 3 out of 5 tax years. They don't have to be consecutive years, but over a period of 5 years, they want to see whether or not we have had a profit. Doesn't have to be large, but want to have a profit. If it's a horse activities for breeding, showing, training, or racing, that profit motive or profit presumption looks at 2 out of 7 years. So it's a little, they stretch it out a little longer and give us a little more room. So they're looking at the 3 out of 5, 2 out of 7. All that does is bring the, or allows the IRS to evaluate your business for being a hobby. Doesn't necessarily mean you are one. It simply allows the IRS to send you a nice little letter asking you to provide more information about the business and asking you to prove to them that it is not a hobby. The scale of the operation, the size, it's not a necessary factor. What is looking at also is that profit, but you do not need to make a profit to be in a trade or business. But you have to have a profit motive, doing things that will increase the chances of having a profit during those years. So the IRS uses some what they call relevant factors for determining whether a business or an operation or a venture is a hobby. There's 9 of these, and we'll go through more detail of those. But they're looking for the manner in which the farmer carries on the farming activity, the expertise of the farmer or his advisors, the time and effort expended, the expectation that assets used will appreciate in value from a productivity point of view, just not necessarily inflationary values, as we see with land, success of the farmer and other activities or ventures, history of income and losses, the amount of occasional profits earned, the financial status of the farmer, and elements of personal pleasure or recreation. So those are the 9 things that they look at. Not any one factor will make the determination of being a hobby. It's combinations of all of those. So they're looking at all the relevant information, the relevant answers to those questions before they'll make a judgment as to whether your business venture should be classified as a hobby. So farming activity, basically the owner operates to make a profit. So is there a business checking account? IRS often looks at this because one of the things that they've seen in the past is if you only have one checking account, you're making all the transactions through one entity, one business or one bank account, and it becomes very easy to convolute expenses. And particularly the issue comes up if you go to, say, a farm store such as that sells both business items as well as personal type items, and you pay for those personal items with the same check as you buy the business items. The question then becomes, did you break those apart on the tax return? So they start questioning things and they'll start digging really deep if we put everything in one spot. So it's helpful to have a business checking account. Records, they need to be kept in a business-like manner. We see people with records in a shoebox. That's not good enough. We do that when we go to our accountant. The accountants really like us when we take our shoebox of records and have to sort through them. They want it more detailed than that. They'd like to have it, like I said, it can be handwritten, simple ledger pad, to as complex as some of our more sophisticated computerized system. Also, they want to know, does a realistic business plan exist? And when it says realistic, they're wanting more than just, well, I plan to make money raising cattle. They like to have some ideas, some budgeting information of what our annual income and expense projections will likely be. The next thing that they look at, expert advice. Are you seeking sound business and technical information from others? If you're looking for it, if you're seeking that information, trying to make improvements, that's a great help to proving that you're not a hobby operation. Also studying, taking classes, professional assistance, and follow those recommendations made, a great step. Seek information from other types of business owners as well, and also include some of those that are in the same business that you're in. So you can kind of get an idea what's working for them, what am I doing that's not working, what needs to be changed. Time and effort, we want to keep track of this. The time and effort that you expend is a good indication of whether or not we're trying to make this venture a true business. And it doesn't matter if you have an off-farm job and you're just doing this on the weekends and evenings, but keeping track of your time, your effort, helps prove that we have a true business venture. Also, non-farm employment, like I said, if that exists, document how much time that requires of you. And does the amount of time spent on the operation, the farm, does that indicate a profit motive? Now, again, this is facts and circumstances. The IRS, we're going to have to make a determination, but the more information that you provide, because the proof of the business not being a hobby falls upon the taxpayer. If you're hiring employees or managers, are these people knowledgeable and competent? You also make sure you want to follow the appropriate labor laws if you are hiring employees. Changes in the business value, we're hoping that it's increasing over time. We're looking at the balance sheet to see what the net value of the business is doing. Hopefully, like I said, it's increasing. So you look at a balance sheet on an annual basis, you compare those. As long as our net worth is growing, the value of the business is growing, we've got proof that we're trying our best to have and make profits. Changes in livestock values also helps. So if you're improving the herd, So you're getting better breeding animals. Your calves are worth more when they go to market. Those changes, those increases, those improvements, again, provides business proof or business proof versus hobby. Land increasing due to improvements. Are we introducing new forages? So our forage quality is improving. Are we doing things for fertility? Increasing or improving fences, adding cross fences so that we can better graze it, those types of things. So improvements do help. And our profits being plowed back in the business in order to grow and improve, that is an ideal situation. And even if you're putting profits from a non-farm business into the business, it proves to the IRS that you have a desire to make it work. You're not using the business losses to offset non-farm income. Your experience. Did you grow up on the farm, or have you done anything like this before? Has any family member done this as well? Have you had success in a similar venture in the past? Biggest proof of our experience is taking a non-profitable venture, making it a profit, turning it into a profitable situation. True sign of a profit motive existing. So what's been happening in the past may dictate what's going on. So your income and loss history. Are losses due to business startup? Startup years are awfully tough in agriculture because you're spending a lot of dollars in machinery, potentially some equipment as well, and you're putting money into feed, seed, fertilizer, livestock before you ever get a chance to sell any type of production. So business startup situations often create a scenario where we have losses occurring, and it may be some consecutive years of loss. We'll go into more detail on what to look for here in a moment. So what is our production timeline? In agriculture, often our production timeline is rather lengthy. For example, if we plant a corn crop, it's going to be a few months before we get any production from that. Winter wheat, it's a little worse because you're planting the wheat in 1 year in the fall and you don't get any harvest until the following late spring. In that scenario, you've got losses showing up in the first year of taxes or your first tax return, and no production until the second return is filed the following year. They understand this, but they also want to make sure that you understand it. You're documenting what's going on. Also, a big contributor to some frequent questioning by IRS, losses due to events that are beyond our control. Drought scenarios over the past several years have caused a lot of losses to occur over a fairly lengthy period of time. Several farm operators that I've known and contacted me, they said they received the letter wanting them to prove that their operation was a true business, and the drought situation was what caused their losses. A lot of times just sending information concerning the weather reports for those years is enough to satisfy the IRS questioning. Other things that can happen is fires, theft, losses there. Also, the current war in the Ukraine is going to have some major impact on our income this year. Market factors changing, both domestically and worldwide, have an impact. So what you want to do is make sure you keep records to substantiate what did happen and when those situations occurred. By having that, again, you've got information you can quickly send to IRS, prove to the auditor, revenue agent, this is what's happened to me, this is why. A lot of times that's enough to satisfy their needs. Has the venture made money? Has the profits been earned? How large are they? It really doesn't matter. Substantial profits that are infrequent indicate a profit motive. When there are periods of large or continued large losses with an occasional small profit, again, may bring rise to some questioning, but again, that is a period of profits. Have reasonable opportunities to earn profits occurred during those years? Other income sources. What is your financial situation? Do you have an off-farm job? Does your spouse have an off-farm job? Are you retiring and using your retirement income to set up to have something to do during your retirement years? Those are things that you're looking at for your financial status. So substantial income from other sources comes into play. So that's non-farm income. What they're really wanting to know is, what is the purpose of creating this venture? Was it to have losses that's going to offset income from those other areas, from the non-farm items? They're going to ask you, what is your reason for establishing the venture? Have a good answer there. Don't say, no matter what happens, I wanted to do this. You're in the venture to make money. You're in the venture to enjoy it. But our primary goal is we wanted to do this to have another source of income when we get it operating. So the last question they often ask is, are you having fun? And if you weren't enjoying it, you wouldn't do it. So what is your passion for the venture? Is it something you've always wanted to do? Something that you enjoy doing? Is it a lifestyle driven or lifestyle driving the venture? The rural lifestyle, nothing wrong with that. Often that does drive our venture, our reason for doing this. Getting out, getting our hands dirty, having something to do in our retirement years is often that lifestyle change that, again, wants us or causes us to do something outside or more to our liking. Potential for continuing the business without making a profit. Would you keep doing this even though it may never make a profit? I would not tell the IRS revenue agent that make that statement any way, shape, or form. But they will ask, would you keep doing this if it never made money? If that answer is yes, it's going to be a hobby. If your answer is no, and you're trying to make things improve or to improve operations, to turn this into a profit situation, then we have a true business venture. So circling back to that question earlier about business startup. So in the early years of a business, we haven't made a profit. That 3 out of 5 year rule, 2 out of 7 if it's a horse activity, again, brings the opportunity for IRS to question it. If we notice that we've got this 3 years of losses, in that 3rd year of your loss, it doesn't matter what time period in that 5 year, if it's 2 years of losses in that 7-year plan, it's time to file IRS Form 5213. What that does, it is a way to get a longer period of time to get the business established, start making a profit before the IRS can question the business or your venture as a hobby. Now, what's really nice about this form, it will result in an automatic extension of that examination period. Doesn't have to be approved by IRS, it's automatic. So it gives you that extension in the period so that you can hopefully turn this thing around and get profits back in. So you're just trying to get a period of time lengthened so that profitability opportunities arise. So again, that's Form 5213. It doesn't matter when you want to file that. Is essentially the 3rd year. If it's on a 5-year plan, so not equine, 3rd year of losses, so they get that automatic extension. So what's the impact of these 9 factors? Like I said earlier, not any one of them will indicate that a hobby exists. So they can't just pick out one and say, well, you're a hobby, unless you come back and say to the revenue agent, well, I would do this no matter if I ever made a profit. That'll cause them to immediately specify your venture as a hobby. So all 9 of those questions The responses to those are used to make the determination. So they look at all the facts and circumstances of those responses. And again, not meaning that 3 out of 5 years or 2 out of 7. It doesn't mean the business is as a hobby. Again, that is not a triggering event. All that does is allows the IRS to question the owner and have them prove that they are trying to make this venture into a business and that we're not just having involved in a hobby. Now, here's the reasons we don't want to be classified as a hobby versus a business. The tax treatment of losses that occur for a hobby are greatly different than those for a business. Remember what profit is. It's income minus our expenses. Hopefully we have more income than we do have expenses. Losses occur, like I said, when expenses exceed income. So in a hobby, those losses are given hobby loss distinction. Expenses in excess of income are disallowed as a deduction. Now, prior to the Tax Cuts and Jobs Act, we could take a lot of those hobby losses and deduct them as itemized deductions. Currently, with the Tax Cuts and Jobs Act, that was enacted, went into effect in January 1 of 2018, goes through December 31st of 2025. It's very strongly curtailed the ability of individuals to itemize deductions. So therefore, hobby loss items or hobby expenses in excess of income are curtailed, and a lot of our expenses aren't even allowed as even an itemized deduction. A business, losses that occur in a business operation, they are allowed to offset or reduce other income on the tax return. That could be investment income, off-farm income from W-2 wages, any item, other business income other than the farm income. So business losses is offset other things, hobby losses, curtailed, often suspended. Once they are suspended, you don't get to carry them forward. A business loss can be carried forward to offset income in future years. So the tax treatment that applies to a hobby, not pretty. Hobby income also is reported income on the tax return. It's on the front of the return as other income. Like I said, usually deduct ordinary necessary expenses if it's a business. If it's a hobby, those ordinary expenses are allowed within certain limitations. Again, hobby law expenses up to the amount of hobby income. Itemizing deductions, that Tax Cuts and Jobs Act makes it difficult. And hobby losses can't be deducted from any income. They can't be carried forward. They are simply lost. So what can we do to avoid the hobby loss rules? The easiest and first thing to do that's will ward off any problems is the records. So what you're going to look at there and why the IRS thinks they're important, you want to monitor business progress, personal progress. It helps you prepare financial statements, identify sources of income, and also those areas that aren't producing income. So when those areas pop up, remember early on we said you want to fix those problems. If an area is not making money, what do we need to do to either get it towards making money, or should we just drop doing that? It helps us keep track of deductible expenses, prepare an accurate income tax return, support items reported on the tax return, just in case you do happen to be audited, and it gives us both current and historical balance sheet information. Additional things to keep would be or do, or what are you doing to improve your business skills? Keep records of these. Classes and seminars you attend, consultations with business experts, When did those occur and what was our reason for doing so? Keep a notebook, a journal, so that you have a way of, again, proving these are the things I've done. This is what I have accomplished. And then operational changes made with hopes of improving profits. Also record records of floods, drought, disease that impacts business operations. So diseased animals, diseases going through our crops, etc. That information is very helpful. Remember, burden of proof of this being a business venture and not a hobby falls upon the taxpayer. You are responsible for proving entries of income, deductions, and the statements made on your tax return. You have to be able to prove this by having information, receipts, also those added records. Now, remember early on, I asked you about the 15-acre cattle ranch. This was actually a business. Scale of that operation was not large. 15 acres wasn't very big, but what he was doing was improving the genetics of some cows that he was then selling, or breeding animals that he was then selling to others. So what he was accomplishing and what he was doing, even though it was on 15 acres, yep, it was a business. Good management practices also help. So before starting the business, do the following. Get with your accountant. Look at your accounting system. Seek legal counsel. Consult with cooperative extension specialists, other folks that are involved in the consultations. That is very important. Here's some useful publications. I've listed those here. I'm talking about record keeping, how to start a business, keeping records, other expenses, employer's tax guide. The farmer's tax guide is a very good source of information to keep, what you should do, the tax laws that apply to the farm business. And then there's also one for business expenses as a whole. So these are some very useful IRS publications that you'll probably want to go look at and evaluate. Other reference, the Rural Tax website. That's ruraltax.org. There's tax tips located in a little button to the right-hand side of that screen. And that's where you'll find an article talking about the things that we've discussed here today. So it's farm losses versus hobby losses, and that is RTE 2022-05. Goes into much more goes into detail on this. Here's my contact information. If you have questions, please feel free to contact me. Probably best to send an email. Definitely get back with an answer to your question. From this, Sarah, do we have some questions that we need to go through?
We do. We've got some questions that came in from folks during the presentation. So there are a couple of questions about the Form 5213, and folks want to know if they're a beginning farmer and they're just starting out, really when is the best time to file it? Like, should it be filed before year 5?
Okay, great question. The real issue is you want to file that. So if you're not a horse operation, you want to file that when the third loss year occurs. So it may be year 3. You may have actually had a profit in year 3, but year 4 you didn't. So you've got those 3 years, even though they're separated by a year of profit. That would be the time to file that. Or when you receive the letter from IRS, file it immediately. Next.
Yep. So we've got some questions about off-farm income. So one question was, if you're a beginning farmer and you got an off-farm job because you have limited capital to finance your operation, if you just reinvest the revenue or any profit from your business, will this flag it for the IRS as a hobby farmer?
It will not. The IRS, and there's another publication from IRS that was, I guess, was a notice, and it brought up discussion of what happened. What about using income from other sources that being an off-farm job or plowing profits back into the business, how is that viewed by IRS? They look at that as being really a true way of improving the business without going into debt. And they think that's a positive for the business venture. So it will not be flagged as a hobby from that area. That's just saying, well, I'm using money from other sources without borrowing money. I'm trying to make this thing profitable without increasing my interest expense, etc. So that will not flag you as a hobby. So using non-farm income, applying money back into the operation does not classify or signify that that business is a hobby.
Great. Well, and we've got another question here for somebody, and they said they have an off-farm income that is significant, like that's larger than their farm income, and they were told that their farm income should be handled as a hobby when filing their tax returns because they make more money off farm. Is that true?
That is definitely a false statement. It doesn't matter that I have a off-farm job that provides a significant amount of income. By the question that you stated, said that they made profits on the farm. If you're making profits on the farm business or other venture, excuse me, that is proof that you are in the business in that venture because you are making a profit. When the issue comes of a hobby is when that venture is losing money year after year. Then it becomes a question of a hobby. But as long as it's making money, treat it as a business. It increases your overall income. It increases your ability by having a profit. If it's agriculture, you're paying self-employment tax, which increases your opportunity for enhanced retirement benefits later on. So a profitable farm venture with a significant amount of non-farm income, it's not a hobby. It's a good idea. It's a profitable venture. Treat it as a business. Next question.
Yeah, that question is actually a good sort of segue for about kind of entry and exit here. So we've got somebody who indicated, they're a beginning farmer. They started an LLC and their farm business, but they have, due to, other challenges in their life or off-farm obligations, some limited bandwidth, and they haven't made any money and they don't foresee themselves making money in the next few years, but they think maybe a few years down the road, they'll be able to grow it and scale it and be profitable. And they're wondering if there's a way to pause for a few years and resume, or should they treat it like a hobby on their taxes for those couple of years where they don't see much progress in the future?
Really tough question there. A lot of pieces. Okay, so the first thing that this couple did or individual did was they created an LLC, a limited liability company. So they originally, when they were setting up this venture, knew that they were going to treat it as a business. Everything that they've done didn't make money. And since it is a limited liability company, an LLC, they have to follow certain rules and regulations and requirements. So it is a business. We've operated it a few years and made a profit. Now, to do these unforeseen circumstances, which again comes back to a comment made, write down what those circumstances are, when they occurred, why they're there, but continue to treat this thing as a business. Don't change your mind. There's a lot of things that can happen here. Work with your accountant, because a loss in those years, you may end up being able to take a business loss, net operating loss, offset other income in other years, do all kinds of interesting things. You do not want to treat this as a hobby. Continue to look at it as a business. Don't look back and say, well, I'm now a hobby. No, you're really not. You created an LLC. It's a business. These unforeseen circumstances, problems have caused us to have some profitability issues. Document those, because at some point in time, this thing's going to turn around. When it does, then you've got income, you'll be back in business. So you really haven't changed the scope. You haven't changed anything that's going on. You've just got a business that profitable. Now we've got some tough years. It'll be profitable again. It's going to be a business all the way through that period of time, treated as such. Next.
So on kind of the other side of that coin, we've got someone who said they started trying to develop the land, building fences to raise livestock, and then there was a drought. They had feral hogs destroying the fencing, and they just haven't been able to get the farm off the project off the ground. And now, due to rising production costs, they may not want to continue with the venture. If they decide to exit after maybe not even having seen any revenue, how will the IRS look at this?
Okay, so if they decide not to continue not to implement the venture, so they've got all this expense that they put into the land improvements, those improvements aren't lost. Those are going to be added to the value of that property, because those improvements did increase the value. So if they later decided to sell it, that becomes new basis in that property. So when they sell it, let's say they bought the property for $100,000, they put $10,000 worth of fences in it, and later they sell it for $130,000. They only pay tax or capital gain on $20,000, not $30,000, because they're allowed to recapture those expenses and basically add them to basis in that property. So there's no impact there, no harm, no foul. IRS, if they come into question on this, will probably look at that farm as being investment property, not farm property, and it will not be any adverse consequences to the individual.
Great. And we've got one last question that's maybe a little bit more philosophical, but how does the IRS distinguish between or make a determination that something is a hobby versus someone is just not, the question is here is like, or being a bad rancher, but really that's somebody, their production and their management are to their operations detriment. But, if you have a hobby or management problems, you're both losing money.
Okay. So really what's going to call I guess what I would call the definition of a bad rancher or bad farmer is essentially somebody goes into the farm operation and they keep no records whatsoever as to why we have these losses. If you can document what's going on, those periods of drought, those periods of disease, any kind of flood situation, documentation records is what makes a good farmer, good rancher. Having information available to prove to the IRS revenue agent that, yes, this is what caused my problems. This is how, what I need to do to fix them. And my operation, my venture was not a hobby to start with. It's really not one now. That's the difference. Now, a hobbyist, I have a real problem with this question because they said their venture was a hobby. To me, anytime a hobby is a venture that you never expect to make money. If you ever expect to have some revenue generated from that, treat it as a business. But even though that, with the bad rancher and bad farmer, no, that's just a person that didn't do a good job of keeping records, keeping information available, but being a victim of those circumstances. That doesn't necessarily mean you're a bad farmer, bad rancher. It simply means that you got caught between a rock and a hard place and everything went against you all at once.
Well, thanks, JC. That is all the questions that we have right now.
Great. Well, thank you for allowing me to make this presentation.
Thank you for joining us, and thanks everyone for tuning in. Have a great afternoon.